Good morning. My name is Margaret Perez. I'm going to be the presenter today. So, a little bit about me. My name, as I mentioned before, is Margaret Perez. I'm a transfer pricing director at Exactera. But I have been in the transfer pricing arena for over 20 years. And of those 20 years, 16 were with Big Four in base in the mainly in the U.S. I'm original from South America, Venezuela, and it's where I start my career. But I'm currently based in the U.S. In the past 20 years, and has been where I developed most of my career. However, has been also working in other jurisdictions like India, helping the team there, and working with many other jurisdictions in their transfer pricing requirement, knowledge, and growth. So that is a little bit about me. So a little bit about Exactera is, as you know, is leading in tax soft solution. Mainly, we're focusing transfer pricing, where we have other tools also related to transfer pricing, like Exact Match is an AI-driven tool. And as you know, many of worldwide use one of our database royalty sales for agreements. So that is another of our products. So the agenda, what we're going to be covering today, is pretty much a high-level overview of the requirements, some of the consideration that we should pay attention in the transfer pricing arena, some of the specific country-specific requirements, and some strategy or recommendation on what to do, and some other ideas in terms of technology and efficiencies. So I think before I start, I would like just give a little bit of what is transfer pricing. I know many of you are very familiar with the topic, but in high level, transfer pricing is pretty much the price that are set between different parties of a company or multinational. There are companies that are located in different locations, so that is where it's become very tricky. Is okay, even that you are setting the price between your parties or between the different companies involved, it's important that you do it right, because if you're not, might put at risk one of the parties involved. Just to give an example, if you have two entities in different jurisdiction and you set the price very low without intention or with some sort of planning, you put maybe at risk one of the entities if you are shifting profit in to the jurisdiction that is in low tax, very low tax. So that is where it become, and that is where we enter in the topic of the BEPS, and that is something that started like in 2012, 2010 is where it started a common concept about how to avoid profit shifting. And then was published what was called the Action 8 to 10 and 13. That is pretty much some of these approach that a lot of company or countries are taking in order to avoid the shifting of profit among entities. So it's important that many countries are involved or are taking this approach, not all of them. However, even that they are not exactly taking the same approach of the Action 10, 8 to 10 and 13, many companies have followed similar approach or very close to. One of the consideration, and even that we're going to talk about a little bit later, is like what that includes is like that one of the things that they mention in this BEPS that is not pretty much in like making a similar or like analogy. It's more like a kind of unions of countries in regards to this topic. How to document on how to have a open communication on all of them. So one of they have mentioned 3 tiers of documentation. And you know, we mentioned about or you heard the master file, country by country, and local file. The problem is like when we initially started talking about BEPS and documentation, we thought, okay, there are very similar rules to most of the countries that are following it. So we're gonna do a documentation that probably in English, and we're gonna share with all our parties worldwide, and that's it. We are okay. That is not feasible anymore. I think for many years we were doing that, and the world is evolving in a different direction where a lot of countries wants or are looking for something more custom, more tropicalized or more like tailored to their needs or preference. So the other issue is not only that the preference of these countries are increasing in terms of how to present it, but also transfer pricing is well known that for in the tax world for to be one of the most expensive in terms of penalties. Is the highest penalty that have been seen adjustment has been in this area. So it's extremely important that we take care of our transfer pricing in general and perceive sometimes, and using another analogy, as an insurance policy. Sometimes documentation is just that, and is like what we call like our first layer of protection. What is an insurance? So we're going with our first question of our poll. So I'm going to start earlier. We have our first is what is your organization's biggest challenge with transfer pricing documentation? So option A, meeting a variety of country-specific requirements tied to inconsistent filing deadlines, lack of centralized data and processes, and resource constraint and expertise gaps. I'm going to give few seconds for you to answer, and hopefully everybody's doing it. Now, 15 more seconds before we move forward. Sounds good. So let's see how it's in general, how it's going. I think is in general, we see these answers, it will be the biggest challenge might be the variety of requirement across the board. I think one of the biggest challenge, no doubt, but everything else is like a very close as well. Probably inconsistency in filing and deadline, probably in least challenge, but everything else is pretty much consistent. And it makes sense. It's like what I mentioned. It's like a world is changing constantly, and sometimes it's very difficult to keep everything, in order or track everything at the same time. So why localization matter? I already pretty much mentioned that before. Understanding what is the need of each country, why, and sometimes the why. They are like a different entities, culture related, and what they're looking for. So as I mentioned before, one size fits all is not doable anymore. I think that is something that is a mindset that we need to start changing. Using one report or one standardized report that we can use it everywhere is not something that we should be looking for. Like I mentioned, a lot of tax authority are looking not only about the substance or about the form, but also the substance. So initially we were thinking, okay, just having the transfer pricing report is a check mark. Okay, in case I'm an audit, I have that, it's fine. But no, anymore is like a tax authority are looking even for the form. If the report is in meeting the regulation that the format that are expected, they have the benchmark in the way that they're expected to have, the language that they are preferred. The different varieties of what I'm looking for is there is an IP or some transaction that are more sensitive than others. So local versus global, that is what they are looking for and vary across the board. So that's why, like I'm saying, like it's not no one sample template work for all the countries anymore. You can have some that might be standardized, and I'm going to enter into more detail later. However, you have to customize, you have to tropicalize or localize your local reports. So here's when we start getting to different major differentiation. I already mentioned some of them. So we talk about the OECD aligned countries versus others that are a little bit maybe follow, but star specifics. So we talk about master file, local file. Not all the countries have the same requirements. Not all required to have a local file OECD or CBC report. That is the country by country report. The majority, I would say, have the same approach in the transfer pricing methods. Only probably some of them might have one method a little bit different or additional method. Some of them is related to commodities. Other one is more related to services. A majority are based on arm's length principle, or the same concept is pretty much generalized. Is the same that means is as you treat your brothers, or in other words, as you treat your brothers, you have to treat your neighbors, or how you treat your family, you treat your neighbors. So it's pretty much just like when you talk about your related party, it should be the same treatment as you treat your unrelated parties. Pretty much that concept, and that is what we usually call in this field like arm's length principle in general. There are many countries that follow the OECD very in general, like UK, Netherlands, Australia. However, even that they are follow the OECD, they have their own specific, or some of them have their specifics. Like I said, I mentioned before, some of the specific can be the format. They have to follow a certain format or template by mandate. Local language is a preferred in some cases. Another one is mandatory. Some additional certification, and in some countries, in order for be able to submit it, you have to follow some, maybe have to be audited or not audited certified by a local CPA. There are many jurisdictions like that, like we have Brazil, India, Mexico, China. They have their specific requirements, but there are many others that are not in this list. Okay, so what could be wrong? I say like, what is all this? If I don't have this requirement, this form or this reporting the way that should be, what could be triggered? Definitely in an audit, I think, and that is where it is extremely important. So one of the problem is the exposure that you're creating by not having the documentation in place. What that means. So definitely like one of the things in transfer pricing, as I mentioned before, is like the penalties. One of the biggest one is in the transfer pricing is transfer pricing. There are fixed amounts. In some countries, there are a fixed amount of penalties. Another one is a percentage of the adjustment. Sometimes it's a percentage of the transaction. So varies a lot. So probably, and I always mention with my clients, it's like there are some instances like we talk about the materiality of the transaction. In some countries, you have a threshold of what you talk about materiality. Some others is like you don't have materiality. Sometimes it's like you have to do a call, say, well, how much is my exposure in this one? So it's worth to do a documentation or not, because probably the documentation is more expensive than the actual value or exposure of the transaction. So something that also needs to be valued, but that varies country by country. When talk about the exposure is, well, what first depend on the risk of perception of the taxpayer, will risk adverse or risk taker. So that is really important how much we're talking about. So it's when you do your assessment of the value of the risk that you're doing. But also it's extremely important to consider, especially when we talk about large amount of transaction, is the risk of double taxation. When you, like an example that I make before is like, well, if you price your transaction very low and then you are an audit, well, when you have this audit and you are adjust, you already paid a tax for initially, so in the other jurisdiction. So you have to pay it again in the jurisdiction that has been adjusted. So important to consider the impact of double taxation. It's not, it's It also depends on how big the company we're talking about, the exposure of the reputational impact of the company, because that will be usually a public information that will always be available. And also the defense, like I mentioned, is like the documentation is a first layer of defense. So some countries, if you don't have, even if you have the documentation extemporaneous, so I'm going to explain that term later, you might still have some layer defense, but if you are an audit, you lose that defense because if you do it extemporaneous. And I'm going to enter into that detail a little bit more. So now we're going to do some sort of high-level tour, world tour about some of the requirements. In some jurisdiction, I would say the hottest, but I would say it's not limited to. I think the regulations are changing constantly, so I don't want to take it like one country over others. Just like one that have been changing or more specific that you see that are more active in the transfer pricing world. So like one of the thing mentioned is okay, what we talk about documentation, what that actually means. Based on the OECD action 8 to 10 and 13, they talk about the 3 tiers of documentation. They talk about master file, local file, and CBC reporting. So what is a master file? Master file is no other thing. It's like a very broad, general documentation that explains the business and the general transfer pricing policies in one document. That is very generic. It's not specific to one country. It's what the group does in general and how is the policies established. Very generic. Then we go, before going to local file, we talk about CBC. CBC is pretty much a table explaining or showing each of the entities that are involved, what they do, the amount of the transaction that are involved in between transfer pricing and in the result in some kind, and the number of employees, just to give some of the key items are there. Why it's important, why the CBC report is important is like a tax authority, especially where is located the ultimate parent or the headquarter, is know if the revenue or the profit that is in one jurisdiction is in alignment with the number of headcount that they have in that country in particular. So they want to, with that document, they want to identify easily just with a quick scan. Okay, if I have all this profit in this country, but I have 0 employees, does that make sense? So that is where they're going to start looking into that jurisdiction or entering that particular entity. So that is what is a really quick view of what is happening. That I think like also the timing of the documentation is important to consider. I know, and I'm going to enter into detail later, but like there are different times of when we're going to be preparing the documentation for different entities, different based on the different requirements. My general recommendation, and I'm going to mention that later, is what I'm going to say now is start the earliest the better. So that will be based to avoid problems and be more proactive. Like I mentioned before, the threshold varies country by country. Extremely important that you consider even when you do the assessment of what you're gonna decide to document or not. And I think also, like OECD documentation requirement or compliance is not the same that local requirements. I think that it's important to highlight that. So entering like a one jurisdiction is like a U.S. Is of course is always in the discussion. We in the U.S. we follow the 482. It is where is all the requirements from transfer pricing, but the penalties are sitting in the 662 section of the IRC. That is important, where all the requirements or the penalties are defined there. The documentation the requirement in US is it's not strict in that comparing with other countries. However, it's important, extremely important that keep contemporaneous documentation. What that means contemporaneous is you file your tax return, you prepare, or I would say, doesn't have to be final, but almost final version of the transfer pricing documentation has to be prepared at the moment, already at the moment that you file your tax return. Just to give an example, if you're planning to do your tax return or filing a tax return October 15, and you have your report by then, that is okay. But if you decide to do it August, with the extension of course in August, for whatever reason, because you haven't read it, the transfer pricing report have to be at the same time. However, and it's when I want to mention, the earlier the better. When you do transfer pricing documentation, and during that process, even though you do it early, your tax return, you notice that your transfer pricing is not right, and you do what we always call in one adjustment in your tax return. Sometimes is a way that you to say to the tax authority, hey, I have here some adjustment, or I have something to be revised. So it's an alternative if you're doing the right thing, but depending on what duration the transaction is, might be putting the tax authority or in an alert that something needs to be revised. My recommendation is always, when I say early the better, even before the year end is to be closed, or the books are closed for the fiscal year they're covering, do some kind of transfer pricing adjustment, transfer pricing assessment of the transaction, just making sure everything is okay and you don't have surprises later. That will avoid like a double taxation, that might avoid some of the risks that we might see later. But that will be my major recommendation. And always do your report documentation contemporaneous with tax return. That is for the US. That is explicit, something that is important to mention. However, my recommendation will be across the board. Even that the requirement of filing or prepare the report is later on the year before the tax is filed, it's important to do it contemporaneous, making sure everything is okay and avoid surprises later. Also, another important consideration in the US when I say about contemporaneous documentation, the fact that you have contemporaneous documentation doesn't mean that you are exempt of transfer pricing adjustment. You might have an adjustment. Maybe the tax authority concluded after an audit, no, you have to do an adjustment, and that have that consequence. However, the fact that you have a transfer pricing report contemporaneous eliminate the risk of having uh, penalties, because you did that part, you did it right, but you have to pay your tax, the portion of the tax that it was unpaid plus interest and other factors, but you don't have penalty. However, if you do the documentation extemporaneous, um, anytime after the file, the report, the tax has been filed, you have an exposure not only in the part of the adjustment in case that the tax authority identified an adjustment, but also you might have penalties, and the penalties are crazy. Could be for 20 to 40% of the unpaid tax. So it's I think it's extremely important to avoid to consider this one in terms of documentation requirement. There are many other consideration, of course, like I want to highlight that before moving forward, the emphasis, and I think it's important, I'm going to mention later as well, the function analysis. I think as in transfer pricing, we as the majority of us, we are in the economic field. We say like we are a storyteller, pretty much. So it's like we need to make sure that our function analysis says what is happening and is very detailed. It's extremely important that that is explained, and explained in a way that is easy to understand by a third party, and that's this third party is the tax authority. Transfer pricing documentations are not for the taxpayer. It's not for a big four. It's for a tax authority. So they should understand what you're saying. Very easy, good flow. Extremely important. We are telling story. Okay. I'm entering another neighbor of US, I would not enter in Canada. I think Canada and US, they share a lot of similarities in terms of requirement, might be differences in terms of benchmark preference. US is okay with multi-year versus Canada 1 year. That might be something to consider. However, Mexico, we go a little bit more, it's a little bit way more different than the US. So it's like they have what we call a disclosure transfer pricing informative annual return. Mostly this is informative, is because already it's just to present what are the intercompany transactions that were happening. Also during the year, they also is important. I don't think I mentioned here, but is they also consider local transactions between different entities within the same country. In the US and Canada, is mostly international transactions. Many other jurisdictions consider local ones. These requirements had to be filed, if I'm not mistaken, I think by May or 15 or earlier. So it's early in the year. Also, there are other requirements like CBC or master file that might be toward the end of the year. It's important. Other consideration is we have a specific requirement for maquilas, like these toll manufacturings that are very present in Mexico. So there are specific requirements. Of course, another requirement common is the language. We prefer everything in Spanish. So even if you present your report in the US in English, sorry, if you did it and you did it but presented in English, they will consider that as like you didn't present it. So it's important. So even you did it, but it did in different language, it's considered like you failed to present your local documentation. So extremely important. Be mindful of the documentation requirements in Mexico as well. Brazil is another one, hot one. Getting away from Mexico is a huge country in Latin America. However, one of the major things that you might see in Brazil is like until recently, they were not following the OECD requirement. I think they started in 2023 with this requirement. They in the process still of adjustment, or at this point, they should be already shift completely to OECD standard process. Still, there are local requirements. However, in the past, and that's why it became a little bit hard, is they have a specific return for specific industries. So I think like what is important here is, or the risk that they were having by then is like, well, the tax authority was telling you, okay, you have this return, and the overall company or the group were having even less than that. So they have a lot of issue with double taxation, a lot of issue with compliance. So extremely complex in the past. Thank God it's getting better, but still there are a lot of requirements. You need to consider like a local language has to be everything in Portuguese. Other requirements that needs to be considered. They are very protective country in terms of the regulation or tax or intercompany transaction. So something needs to be considered. Other prediction, and we go a little bit faster. Germany, I think, is hard. I think is very active in audit. It's impressive among the group is we see a lot of constant audit in Germany. They're very aggressive, and they are very traditional in terms of how to perceive the documentation is have to follow certain process. I think they even have to file the recommendation, if I'm not mistaken, in paper. So they are very specific. But one thing that is very interesting about Germany is how they are focusing intangibles. Transaction that involve intangibles. They are very protective of that. They want to make sure that they're protecting their intangibles generated in Germany. So that's why they are very focused on that. It's really important to follow this consideration of this transaction, of this documentation requirement in Germany. And of course, very strict in terms of compliance. I think anyway, like in terms of, if I'm not mistaken, the requirement for Germany is toward the end of the year, so it's more later to make sure that it's contemporaneous. But let's make sure that you have it in place. UK, I think, is one of the most flexible in general. Is that doesn't require specific format. They follow a lot the OECD guidelines, but of course, it's like a lot of requirement needs to be and others. requirement needs to follow. But in general, I would say it's less strict than others within the region. We move a little bit at France and Spain. Definitely, like both prefer local language in terms of documentation. They are very particular. Sometimes I have heard in some audits for France that they want in a specific format. However, I haven't seen any requirement that says something like that. But they are very active in audits as well. Recently, have heard a lot of audits from them. And one thing that is interesting about this one, and I see in other jurisdiction, is penalty for omission or errors. So I think that they charge, I think, 15 euros per omission and error and can go up to 10,000. But that is only considered for omission. So you can imagine for failing in older other documentation requirements can go 50,000 or even more just for not having the documentation in place. So extremely important to have documentation ready when in audit or in a contemporary with tax return. Spain is not very different in that respect. They also have a disclosure. Local disclosure have to be presented. A lot of requirements in terms of a specific, I would say specific format and how to display, but definitely very focused on compliance. Another country is not here, but I want to highlight is Italy. Even that is very specific about how to present the report in certain format. It has to be in local language, and even that if you present it, you have to stamp some sort of I think electronic seal to making sure that you did it contemporaneous. So something important to mention between these countries, Italy is very aggressive or consider a lot these format or form requirements. Going to Asia, we have here China, India, Japan, and Australia. I think one of the India is what. Let's start China. I think one of the major things is also aggressive in tax authority, in tax out, in transfer pricing audit. But one of the things that is important to mention here is like when they talk about the value change analysis required in their documentation. So they don't want to see only the transaction that you're testing. They want to see the whole value change of this transaction. They want to make sure that wherever the profits going is in alignment with the function that they are performing. So this is extremely important to mention, and is pretty much why should we include in the master file, but they want to have in the local one. India, I think, is like a more requirement, also a lot of the form, but extremely focused in penalty. Penalties are very aggressive. Deadline for is always November 30th. Japan, they follow a lot the OECD, the requirements similar to Germany, very focused on intangible. I think one particular comment in Japan, they are very, they prefer pretty much everything local comparables, local analysis, everything, and local language. Australia, I think, would be pretty much more same, the risk assessment they want to do it, consider. However, I want to mention here is in financial transactions. I think that is important to mention is, well, when you have a financial transaction, they have to prove of some sort of debt capacity analysis, meaning that you have the capacity to repay your debt. So that is something mentioned to in Australia that is very strong on that. They require a lot of that information. I'm gonna be moving faster because of timing. Two other countries from Latin America I want to mention, and because of the peculiarity. Argentina is one of those that have one method more than the standard 5. These 5 are what is TNM profit shift profit split method for transactional profit-based analysis, and the 3 methods for transactional method. They have one more that is rated for commodity, specific for that for that commodity transaction. So you have to prove that. Language mandatory. But another thing that I want to mention about Argentina is that is one of the countries that you require a CPA certify that validate certify the documentation. So that makes a little bit more complex in terms of Argentina, not because of the documentation, but also is local form or requirements. Another factor is they always have to test the local entity, even that the what makes sense is the other party in the methodology they're applying. They always want to test the local one. And something that I forget to mention about other jurisdiction, I think it's the case of Argentina. A lot of tax authorities, they don't want to see a year that where you have losses. They expect always have profit. So that is interesting because it's like a, well, but not always you're gonna be in profit. You might have a bad year for whatever reason. So, but for tax authority, also I think in China it's the same. They don't care. You want to always see a transaction result are profitable. Colombia, I think, party form requirements very strict in the form in terms of, and if you also is another country that have a lot of penalty in terms of mistake, errors, typos, very strict penalties like crazy. Form and all the documentation requirements, agreements have to be in place in order to have the deductibility of the agreement, the transaction. Very aggressive. Okay, so we have our next question. Which region present the greatest documentation challenge for your organization? America, Europe, Asia, all the regions are equally challenging. I'm gonna give 40 seconds. Okay, let's move on. I would say like, and I'm not surprised the response is like Americas. I think Latin America in general is very challenging in terms of form and requirements. I think Europe and Asia in general, they're very standardized. But I'm not surprised about the response being heavily, Americas in general, very challenging. Okay, so let's some other elements that needs to be like, I think in summary I want to mention what is critical in the documentation. I would say, like I mentioned, in general they have function analysis, the requirement, function analysis, industry analysis, the transaction description, the method, and the benchmarking. That is very standard in most of in all the requirement, all the documentation. What varies mostly is language, format, timing, comparability, local versus regional or global, and the certification, as I mentioned. I want to highlight the importance of the function analysis in general, even that is a requirement or is something that is in all. Not all the reports have strong in the function analysis or industry analysis. Remember, I want to highlight the importance of telling a story, and these story have to be consistent with what is happening. And I'm going to enter in that detail a little bit later. So here we're going to start entering what strategy we should be focusing worldwide. So I would say local, something like that, like it will be like a global and local strategy. I would say like we always going to start with the master file. And when we say master file, could be also master file and local master file or local template. So I think in general, master file is telling the general story of what is happening. It's telling you what transfer pricing policies you have, what is in place, what the bodies involved, what is happening in the business. So, and the advantage of the master file is as I'm aware of, there's no specific format on how to put this in for to prepare the master file. Have to include certain information, yes, but there is no sort of specific format that I have to follow. But it's important to consider that this is the major story that you are telling and have to be consistent across the board. But then we're going to look what is the local one. So what I mentioned is like you might have a local template that you can follow when you describe the general description, and then you can adapt or adjust to the local requirement. But at least maybe the benchmarking of the region is you're using region is standardized. The same kind of calculation is general. If you have a centralized information, it is um, the financial information is is consistent across the board. It's not like in one place you're saying one story, another one is saying the other one. And of course the functionalities. The adaptation, as I mentioned, is like the translation, if it's needed, local formats, variables. Another adjustment is important. But important is you can go from something more broad and you can adjust based on the requirements. So I think the general process is very standardized. It's like, okay, you collect the information, you analyze the information, you understand what is happening, then you develop your master file and your local template, and then you create your local template. Of course, review and filing of the document. That is pretty much the framework of what to do in general. I highly encourage stop a little bit in the process of take care about when you talk about data collection and localization is, well, even though we are using the same similar information for other ones, we want to tell the same story everywhere. We are not want to say in one entity you do something or and the other one is saying something completely different. Extremely important that we saying the same story across the board and have if there are some different and we're documenting the same transactions. I've seen in many circumstances, like in one entity, you document a bunch of transactions, and the other one, other transaction, even that looks that they are connected, these entities, but in the end, the report are not saying the same story. So something's wrong there. So consistency in that is extremely important. And I want to mention about consistency. Consistency could go in different direction. Could be consistency among the different years. So every year you are being consistent. Another one is being consistent in what the actual facts are happening, what you have in the documentation. Extremely important to mention that and that we are prepared and document that. Well, another question for today, really quick. How's how does your organization currently manage transfer pricing documentation? So fully centralized, hybrid, decentralized, what sorts? I'm gonna give 40 seconds. Okay, let's move forward. Okay. Fully centralized. I think sometimes it makes sense. Fully centralized and hybrid, I think, is a most common kind of a scenario. Um, I think at the beginning it was very decentralized. So the transfer pricing, like 20 years ago when I started my career, was very centralized. I think, and then it was evolved with BEPS to more decentralized. And now, given the evolution of the transfer pricing arena, is becoming some more kind of hybrid. So it makes completely sense that those responses. Okay, so this is not exactly just a timeline, but I just want to give you some idea. Some countries with term of deadline. So even the U.S., we talk about contemporaneous is actually when you do the tax return. If you do in April, you have to do the transfer pricing documentation by April. If you do in October, should be by then. Mexico have different deadlines, and I want to just mention documentation, like I mentioned, could be local file, master file, and CBC. So maybe CBC and master file for Mexico is December 31st, but the DIM, that is the local submission of the annual disclosure, and the transfer pricing documentation is early in the year. If I'm not mistaken, it's May 15th. Brazil, I have also different dates. I think for July 1st might be, let me see, it's mostly for CBC. Other requirements might be October 31st. Germany is open request, but however, the documentation have to be done before the end of the year. China have different deadlines as well. June is for the local, June 30th for the local file, but CBC have to be May 31st. India, everything is November 30th. Australia, I think is usually when you have to file the tax return similar to the US in that perspective. But dates vary across the board, is all over the place. However, my recommendation is whenever you have to file the tax return, have your transfer pricing analysis at least ready by then. I think the recommend here we're talking about translation. Like I said, many countries generally accept English. However, there are ones that are very specific in terms of language. So some of them is mandatory language, local language. Other one is preferred, like Brazil, Portuguese, Mexico, Argentina, most of Latin American countries, including Spain, they prefer Spanish. The other ones might be prefer French or German. However, you present in English might be okay, but they probably might request like in 10 days, you have to present your translation. So you're still in compliance, but they want to make sure that you provide a translation. I just want to highlight some solutions or alternative here, like that I already pretty much mentioned some of them. Centralized management of the data, I think, is extremely important because that I think helps a lot to have a really overview of what is happening. It's like and even take some actions. So probably 1 year you might need to do some adjustment, but then you can identify what is happening and fix it. If you have like a decentralized, probably you miss that view, that holistic view. It's really important for the manage. That doesn't mean that the local files have to be decentralized, but at least the data or the information might be at least centralized just for visibility purposes to understand what is happening. Like I mentioned, some templates, automatization that might help as well to meet these requirements. Track of what is happening in documentation, I think is key. The project management is extremely important in transfer pricing because of all the different deadlines and requirements. The benchmark integration, what I would say is, well, the benchmark even that varies sometimes country based on the requirement, I think you can always do something that more generic, and at least the result have to be consistent. And if there is not, we need to find out why. For example, I'm going to go back to India. They have what the safe harbor for some services or transaction provided from India. The country can provide, apply that safe harbor for India only, but you have to see how that impact if you run a test for the counterparty that a safe harbor is still falling within the range. So another thing that needs to be considered in general, version control, extremely important for like consistency, as I mentioned. Any change that happen, functions or risk of the company or the group needs to be documented. And well, filing alerts and needs to be considered. Well, building a defensible documentation. I think we have pretty much talked about all of that. Definitely contemporaneous documentation preparation. Even know my best approach or best recommendations, do it when the tax return, at least when the tax return is done, even the economic analysis. Even if you can be even more proactive, do it before the year end. So you run a benchmarking, do an assessment, see what is the result, at least to perceive if there are no any adjustment that you can avoid and in the future. Consistency, as I mentioned, consistency can go in different ways, year to year, but also consistency of what is happening with your policy. So you might have a policy, you have an actual result that you're testing, but it's actually what is happening. So that is what you need to test and confirm, because the tax authority will be figured out. So let's make sure what is happening is consistent what we are documented. That's why the annual review is important. Any change has to be documented. And if you document it 3 years later, when you are in an audit, might be suspicious for the tax authority, because they might think, okay, you made it up. This one is not that correct. Economic substance is pretty much in alignment with what I say, is making sure what you are doing is in alignment with the characterization of the function that we're doing. So if you characterize an entity as a distributor, well, let's make sure that that entity is a distributor or is not a limited risk distributor. So that is important to mention, just an example. The quality of this benchmarking is important. Even they are might vary a little bit from one country to other one, but the quality, so the benchmark has to be in alignment with the function that we are testing. And I'm going to highlight function, not the entity principal activity or business activities is different. Also, I want to mention about adjustments. Adjustments might be in some jurisdiction might be a requirement, and other ones is not. There are countries even say like adjustment might be a tool to adjust the results, so for the benefit of the taxpayer, but that might vary country to country. So different positions on that. So, but whatever you do, make sure that is consistent and have a logic behind. Of course, the form needs to be complete, meet the requirements, and have some kind of any support of whatever is happening. Sorry, I'm going a little bit faster because of timing. What triggers an audit? And I think I mentioned some of them. So definitely losses. I think I understand, and we understand that 1 year you might have a bad year. That could happen, but have to be documented and have to be some proof of that. But however, what shouldn't happen is like you have recurrent losses. From tax authority point of view, like it doesn't make sense that you are making you have a business and you are making losses every year as a group. Somebody has to, compensate for that. Somebody of benefit of these losses. So has to be, you can have one by year, but you can have consistent losses. Has to be a justification. Another one that make trigger a lot of audit is IP payments or management fee payments. So tax authorities are not really fan of that in general. Like they're gonna trick, especially when the amounts are large in IP and even management fee in general. You have to prove that there are some benefit that you're receiving. There are some actual story that prove that this management charge in the case are reasonable. So extremely, and sometimes you have a transfer pricing documentation to be able to deduct those charges, and that is in particular in Puerto Rico, I want to mention. So in order to have the deductibility of the transaction in your financials, you need to make sure that you have a transfer pricing documentation. Financial transaction, as I mentioned, is like in some cases you need the debt capacity analysis, some analysis before happening to make sure that you have the capacity to repay your debt. Other one might be when you have unusual kind of interest rate, it might trigger some audit. You have to justify. My best recommendation in this one, and it's only probably one time that you need to do it, when you have a loan, or intercompany loan, do a benchmarking analysis of your loan, do a debt capacity analysis, do an interest rate analysis, and then and keep it as you support. You don't need to redo this analysis year after year, because it's at the moment that you set up the transaction. And of course, as I mentioned, business structure, any change in the function group structure needs to be considered. The last question for now of the group is, how would you rate the organization current audit readiness for transfer pricing? Very prepared, somewhat prepared, not well prepared, unsure. I'm gonna give 30 seconds because of the time. Okay, move forward. Uh, okay, it makes sense. Somewhat prepared documentation. I think it's good. I think it's a good place to start. There are always room for improvement. There are always some risk that some company are ready to take, but it's always to review, revise what you have. So I think extremely important. But I think just have at least some first layer of protection. I think extremely important. Okay, we're almost there. So I think just best practice to keep, and I think I already talked about this one very in general. I think documentation needs to be contemporary, consistency, be specific. I think, like I mentioned, this is a storytelling. So let's make sure that whatever you do, or the documentation, it should be really clear, transparent, and be as specific or generate the penalty what we are talking about in the transactions. And but remember that is story utility tax authority and be ready. I think that is like the most important one. Um, So proactive and reactive. I think like the two major question that you might have here is um, what you can do to be proactive. I mentioned some tips like have documentation ready, do some year-end analysis before. I would suggest like okay, the do an APA. That might be some another alternative to be proactive, especially when you have very high risk transaction. Another one is bilateral. It's very uncommon, but could happen. That is another one with the tax authority and regular review of what you have. I would say reactive. Well, in case that you already have an audit and to avoid reduce or maybe avoid penalty double taxation, you might have some MAP maps or competent authority procedure. That might be an action, but that will require probably a little bit of expense because of litigation and all that. But at the end is what is more after the audit is happening. But I think the idea of the plan here is be more proactive. Key takeaway, I know the last minutes. I would say, like, I think we touched most of that. Know your requirements, centralized data, and localized output. I think centralized data, localized output. Meet deadlines, extremely important. Contemporary report, the early the better. And I want to mention something I haven't mentioned across the board, is technologies here. We already know about AIs here. It's extremely important. Tax authority are updating their reports, their system anytime soon. They're going to start figuring it out what is a trigger for transfer pricing and just scanning or using this tool. Some tax authorities are already doing it. So let's make sure that you are prepared because that the audit AI might be extremely helpful from our end, but also will be helpful for the tax authority to identify any inefficiency or any audit risk. Has been a pleasure to present today. So just a message away. Please feel free to reach out. You have more questions. This presentation will be available for you. Hopefully you learned something today. And again, hopefully to see you in the next one. Bye, everyone.